Stocks always leave clues before they stage a big rally. Today, I'd like to share with you a classic pattern that often appears before a stock takes off, the piercing pattern. If you can identify it in advance, you will often be able to seize low-level rebound opportunities earlier. So what is the piercing pattern? It also consists of two candlesticks. On the first day, there's a large bearish candle, showing that the market is still falling, and sentiment is bearish. On the second day, the price opens lower and moves higher, as if it will continue to drop. But here's the key point. The price is then quickly pulled up by capital. It not only recovers the losses, but also the closing price climbs back to above half of the previous day's bearish candle body. This is called the piercing pattern. One important note, it is different from the engulfing pattern. It does not need to fully cover the previous candle. It is valid as long as it breaks above half of the body. What does this pattern indicate? It shows that market forces are shifting. The bears were originally in control, but on the second day, the bulls fight back strongly, directly moving into the previous day's decline area. In one sentence, bears are retreating, bulls are advancing. This is often a potential bottom signal, but there is one critical premise. The piercing pattern must appear at a low level in a downtrend to be most effective. Let's look at a real case. Take this stock. After a period of continuous decline, it first forms a clear, large bearish candle, showing that bearish momentum is still ongoing. But on the second day, the price opens lower and moves higher. Many people thought it would keep falling, but it was quickly pulled up by capital. Finally, the closing price rose back to above half of the previous day's bearish candle body. This is a typical piercing pattern. Afterwards, the stock saw a significant rebound. But remember, you should not go all in immediately. When you see the piercing pattern. Finally, here's a formula for you. A piercing pattern at a low level signals a rebound. Without confirmation, you may easily get trapped. Once you can read these signals, many opportunities actually appear before the price surges. That's all for today's sharing. This knowledge is essential. I'm Brother Yang. See you next time.